The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Sounding bad, folks. I'm okay. I just have a little bit of a raspy throat. It's not sore or anything. I think it's more of an allergy than anything else, but I'm doing all right. 1 second, please. Okay. These markets don't surprise me very often, but we have something going on here I think is very important, folks. We talked about it yesterday. We talked about it Friday, and we're going to talk about it again today because I think it means something. At least it started out today anyway. For the last 3 days, last 3 trading days, this S&P cash has not taken out the high of the 17th of June, and we've done it 3 times in the futures. That's just unbelievable to me, and it's a considerable amount. So I'm somebody's selling this stuff. I don't know who it is. We also have not taken out the highs in the small cap index IWM, nor have we taken out the highs in the New York Stock Exchange index. All it's done is complete that ABCD pattern that we talked about. Now we do have the, we're in the zone now for the full moon, so we should be seeing some type of top in here. But if we go down just a day or two and then turn around and get really strong and take out those highs now, then you're looking at something that is a whole lot stronger than I'm anticipating. So we'll see. But those divergences are very rare because the cash market is really big. On the yesterday's volume was as low as volume on the cash index that we've had since 2014. This was brought to my attention by Trader Mike in Thailand, and during that time we also turned around. Whether that means anything or not, we'll have to wait and see. But the market is starting a little lower this morning, and we'll just what I mentioned. If we get strong today and we get taken out those highs, then it's going to go a lot higher. That's the bottom line. So if it starts down, we could have a pretty good correction because this is a big divergence that we haven't seen in a long time. Now, at the break, at the half-hour break, we're going to have Bill Koval on from Koval Analytics. He's going to be talking to us about some things in one particular trade that we've got on our watch list, and he has it on his too, so we need to pay attention to what he's looking at, and that happens to be in the natural gas. And the ETF for that, of course, is UNG, but we'll be looking at that when we move along. Now, we did have a little bit of a correction now in silver and gold. They have moved down to their, gold just barely backed off a little bit. And, it is, still looking, extremely strong as near as I can tell. We're probably going to go higher. My buy point in the gold was down around 1142, 1146 area. We got to 1150 last night, and I think we've got a chance, for the market to, get in there and get down there and look to be a buyer. That's about, you want to be looking at around $17. That's a harmonic number in gold, and the high was at say 69 and 17. From that takes you down to about $45 an ounce, so $11.45 an ounce. So that's what I would be watching in that, for a place to look at it. Now, we've gotten a little bit of a rally now in bonds. I don't know if it's a mini flight to quality. It certainly isn't. No one's absolutely afraid of this market, as can be shown by the VIX. It was down 10 days in a row, setting a record, and looks like it'll be up a little bit today. But no one has any fear in this market. I mean, the fear left after August 24th. So just keep your powder dry here, folks. That's all I can tell you. This divergence that we had in the S&P and the small cap and the New York Stock Exchange Index is very important. This basically means is the Dow Jones Industrial Average, which has been the strongest, missed the 61% retracement by less than 0.5%. and that's off the whole move down. And that's mainly because of the big stocks, like you have McDonald's and Nike and Disney and things like that, because we know that the Dow is price weighted, not cap weighted. All right, the next one that I'd like to talk to you about is the Treasury bond market. Because we made a 50% retracement yesterday in the bonds, and the 61% retracement back is that number we were talking about yesterday at this one at 58.23. Excuse me, 158.23 to 158.25 will be the 61% retracement back. That'll be the one that'll tell you whether the bonds are most probably getting ready to move down or explode higher above that 160 level. I don't believe they're going to get above 160 unless we have some type of a major flight to quality issue, and the whole world is not looking for that right now. But it certainly could happen. One of the questions that I received over the evening was the movement that we had in Volkswagen and also in Deutsche Bank over the last few days. We rallied about 35% in Volkswagen and about 30% in Deutsche Bank, and that's just short covering rally, folks. That's basically all I see as far as a spot to determine that they were so oversold that they had to rally. And the reason why the percent is so high is they're coming from a much lower percent. That's basically the bottom line of what we're looking at. Now, one of our listeners here at TFNN sent me a really interesting chart about junk bonds and how the yield, the spread between the junk bonds and the corporate bonds is really starting to accelerate. In other words, the junk bonds are going down very fast, making their interest rate that you get on that much higher. The reason why they do that is that interest rate goes higher. That sucks people in that are looking for a great return. Well, remember what Bernard Baruch said: don't be concerned on the return on your money, be concerned on the return of your money. So pay attention to that as you're looking at it. But this chart is very telling. You can see over the last 12 to 15 years that we've had a pretty big move here. The important part about this chart is, as you can see, the trend is coming down. And if you look at the time period between 07 and 09, that's when our market really hit bottom. And this tells us that the market is actually heading down. And it's not heading down right now, but we just completed that ABCD pattern in the New York Stock Exchange Index, and maybe this is it, folks. I'll tell you, I haven't seen a divergence like we had in the S&P cash. The New York or the IWM, the Russell doesn't mean that much to me as far as the divergence, but when you get it in the New York Stock Exchange Index, and you also get it in the what I want to put up the New York Stock Exchange one too, because it hit the exact number also. And when you see that, that's telling you that there's something serious happening, because you've only got the futures of the S&P moving up along with the Dow. And the Dow's easy to move. You can hit four or five expensive stocks in there, and it's on its way. So anyway, that's what we're keeping an eye on this morning, and we will watch it, very closely. Now, we've been talking yesterday about the Australian dollar, that it was up against some really serious resistance up there at that 73.75 to 73.80. The high was 73.89, and now it's broken 100 pips under that. So that's telling us it's a little strength coming from the dollar against the Australian dollar at this particular time. So we should get about another, probably another 100 pips down. We made a low of around 68. We rallied to 73. That's 5. And the 61% retracement coming back would take us down to about 70 in the Australian dollar. So if you want to look to buy the Australian dollar, you want to be watching for it at around 71 or 70 versus the U.S. dollar, as near as I can tell. Now, the British pound, we've been waiting for lower prices in that. We're starting to see some more of that today. And, we believe if we get below this 151 level, in the British pound. We're heading down to the 145 level, which would be quite a bit of a difference between these things. So we want to watch that very, very closely. If you'll give me 1 second here, take a little drink to clear my throat, and we'll be all right. If you have any questions, folks, it's 877-927-6648. That's what you want to be calling if you have a question about the markets or anything like that. We have a situation in the transportation has been very, very bullish. Now, we haven't taken out those highs of September 17th either in the Dow Jones transportation. We got up to the 78% level of that level yesterday, but we did not take out the highs as of yet. It's only been the Dow Jones and the S&P futures that have been able to do that. The NASDAQ was only able to make a 78% retracement of that move when it hit 43.80, and we've sold off somewhere below that level. So that's something that these divergences, I think, really mean something, folks. I know yesterday was a holiday, and it was still, relatively quiet, but it wasn't a holiday on Thursday, and it wasn't a holiday on Friday. So, there's been people selling this stuff, and they're doing it very, very quietly, without any fanfare, is the way it looks. Now, the first chart that I posted into the room today was the price of crude oil. We mentioned that. We mentioned this on Friday too, is the fact that, crude oil went up above $50 a barrel, and they had a parade over there at the Chicago Mercantile Exchange, and, the market did not close above that. And that led to a pretty good correction. We're down $5 a barrel. Last night, we hit the exact 61% retracement at 56.65. And as long as that can hold, that could be a significant bottom, but frankly, I'm not sure it's going to. We've talked about the products, the oil, heating oil, and also the gasoline, and they are not looking good, folks. They are below the 786 levels already. So it's only the crude oil that's holding this whole complex up. That's the one that gets all the press. The other two hardly get any press at all. So we'll watch that. But right now, I just don't think oil is ready to have its pretty big move. I've had a request to post the chart that we were looking at yesterday in the Australian dollar to show the ABCD pattern that came in there at the 73.80 level. We've hit that, and then we've backed off about 100 pips. Folks, 1 second, please. Holy.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we have our first caller from Boston, Massachusetts. Jay, are you there?
Yeah, I am. Good morning, Larry.
What can I help you with, my friend?
Yeah, the question is this. Last week I'm reading an article in the Investor's Business Daily about Chinese warships right now steaming from the Far East to the Mideast to get in on the Syria action. And I thought, this is new. This is a big change. This is a Chinese foreign policy shift that might be extended for quite a while. Chinese don't do things for nothing. They're very careful planners, and I'm seeing that this could be the start of much more military action by China. So I'm thinking, well, how is this going to react? How will people react to this? And I'm thinking gold. I'm not sure if the markets would tank, but I'm thinking that gold, the fear premium on gold, could really see a violent upsurge. So I'm wondering, is gold the way to play this? And if so, what's a good way to do it? There are leveraged funds, but who knows about this time picture? This could be 6 months. This could be a year. Not really sure how to play this options. Any ideas here?
Well, I think you have to play it conservatively because the gold is still, in a downtrend. If we ever get gold above 1240, it won't be in a downtrend anymore, and people will start to pay attention to it. And I still believe that we're going to make new highs in gold. I don't think that 1900 is going to be the final top. And I'm speaking just from a technical picture, Jay. That's all I'm looking at, because I watched the market correct from 800, down to 230, and from 1,000 down to 6 something, and then from 1,900 down to 1,100, and all those were perfect. Fibonacci retracements from the perspective, the way I look at it. So I still think we're bullish, and I'm just waiting for gold to get above 1,200, and I will start to buy. And I buy gold. I bought some last night, and I love to buy silver coins. I think everyone should have some of the silver rounds, those 1 ounce silver coins with the Liberty on them and stuff. The Eagle, I think everybody should have some of those just as safety, because what the Fed has been doing is a giant experiment. I know they're smart. These guys are much smarter than you and I, Jay. Well, maybe not you, but certainly they're smarter than me. But they think they have done something really clever here. And this is not the way you run a household or a country. And that's just the way I look at it. But I agree with you. I don't know anything about the military. I really don't. There's not anything that I understand about that, but it is a change if China is actually doing that, because they have a hands-off policy on all that stuff. They're not the policeman to the world like we are. So you might be looking at something really important, my friend. Keep an eye on it. Let us know. Let us know if you see something. Come into the den and tell us, because I don't read the news. So if you'll let us know, I'd certainly like to know that.
Yeah, we may see sea battles in the future. It's hard to know. Do you think
that's for sure?
Yeah, could silver and platinum react along? Would they pal along with gold, say, on this on such a rise?
Platinum, bottomed a couple of factors. I'll put that chart in the room here to let the platinum bottomed a good 2 weeks after the gold. Well, 3 weeks after the gold and silver had bottomed, and now platinum has ran up to it hit almost $1,000 yesterday. It's backed off a little bit, but it's made a major butterfly pattern there, and that's telling us that we are probably turning the corner in some of these metals. And I think the key here is above 1170 in the gold. That should really that takes out the highs of last week now, or last month. We've already done that in silver. And last night, I don't know if you follow silver, but silver made a 61% retracement down there at $15.60 per ounce, and quickly rallied 30 cents an ounce from that level. So they're still acting very bullish, but there's not been there's been a high volume breakout in silver to the upside. I don't think there's any question about that. But gold hasn't did it yet, and gold is 6 times, as far as open interest and volume, what the silver is. So when gold has got to be the leader here. It's got to step up to the plate and say, okay, boys and girls, the teacher's back, and away they go.
Yeah. Do you think there's more juice in silver and platinum now because they tanked so badly, even worse than gold is?
No, I don't think so. I think there's a lot of juice left in silver because, first of all, we got down to just under $14 an ounce, and now we're trading, 20% higher. And that takes a considerable amount of buying to get it up here. So I think it's acting pretty good myself.
Yeah. Oh, well, good stuff. Lastly, do you think options might be a good way to play this?
No. If you're going to do options, be an option seller, not an option buyer.
Yeah, all righty.
Okay, thanks for calling in, Jay.
Thank you.
Okay, you bet. Okay, we have Bill Koval at the break, folks. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, looking good, feeling good. We have Bill Koval of WDK Analytics on the line. Bill, are you there?
Yeah, sure am, Larry. Can you hear me?
I hear you perfectly. And first of all, everybody in the den would like to thank you. We had you on in August, and you were talking about a potential really big break. That was around August 17th, I believe. Market topped on the 19th and, went down pretty hard. So we want to thank you for that. But I'm really glad to have you on as a guest today because you're talking about something that we have on our watch list, and that is natural gas. But what I'd like for you to do is to go ahead and go through your slides. It would be a big help for me because I've got a little bit of a raspy throat. I don't feel bad, but I don't sound too good. So why don't you go ahead and start? I've posted your first chart of the dollar index, and let me know when the next one is up, and I'll post it.
Okay. Take a little bit extra time on that dollar chart because I want to give you a prelude to affecting the dollar and hence nat gas. So it'll just take a couple of minutes here, and we'll.
You got as much time as you want. Take your time.
Okay. As the overall slide indicates, Net gas is off 50% here in the past year, and the circumstances causing this decline are changing. And those circumstances specifically are that the market dynamic is having a beneficial effect on natural gas is, simply the weakening of the dollar. It's more a recent phenomena. I mean, quite frankly, the dollar has screamed higher here for, a year or so, practically. But that has, in the face of no growth, a higher dollar are the twin problems that are causing emerging market chaos, which in fact is now contributing to some dollar weakness. And I expect that to continue into 2016. Of course, when the dollar weakens, why it's positive for commodity prices. Other factors that are helping natural gas or expected to would be positive seasonal tendencies and geopolitical events, especially in the Middle East. Finally, there is a kind of I'll call it a white swan event on the horizon that really nobody knows about. In fact, it's going to come to the fore in 2016, 2017, and it essentially is an alternate to the normal QE, which will involve fiscal policy. I'll treat that in more detail in the text that I mail out to attendees who request it, but it should be enormously beneficial to commodities in general. And in short, as it's been described by the largest investment bank in Australia, it's going to be like a paradrop of money. But instead of dropping this money onto bankers and billionaires, it's going to be directed towards the economies of the world instead of the bankers of the world. I think it would be quite, in terms of results, and enormously beneficial to commodities in general. Ed mentioned zero hedge mentions in that connection. Keep an eye on gold as the canary that will signal the increasing likelihood of those events. So let's get into the charts. You can see, the dollar chart has, has climbed, tagging $100, in terms of the index, but it's now off. And I specialize in volume lines, as I think I've told you before, and they're accurate in terms of the way I use them. And what they're signaling here on this dollar chart simply is that the dollar is weakening, but it cannot be considered safe to go long the dollar until those volume lines on a weekly frame get below price. And that's going to be a long ways away.
Okay.
And then jumping to which is the weekly longer frame gas, the continuous contract. It's simply showing that cycles are now under price and supporting price, coupled with the fact that we're seeing what appears to be a double bottom. That and a weak dollar has had quite a beneficial effect here in the last couple of weeks as the X and G slide, which I think I got that at number 2 or 3. That's a daily frame, and it shows that nat gas index has jumped quite a bit here in the last 2 weeks. Before I go on, any comments or questions as far as covered?
No, you've got their attention. They love charts, and I love charts, so they're very clear and concise, and the story that you're painting is a very believable one. So just fire away and show us what you're looking at, and we'll be following it. So go right ahead.
Okay. Next, we've got a linear regression end channel line for a daily nat gas chart. And the key element in this chart is it is definitely showing a downtrend for this period, but the more significant part is to the right, the uptrend, price bouncing from off of 260 up to 275. There is that blue stair step, the down stair step. The significant thing is it has cut through price, and that means one thing, that volume is supporting price as it moves higher, and that's a good thing. On this frame, it should continue upwards until such time as volume that gets above price, which you can see to the left when $3 back in September, why volume got above price, it put downward pressure on it down to 260. So that's a favorable setup there as well. And then the final futures charts are there's a dual daily and a 60-minute chart on. Oh, this is actually the ETFG. For those folks who may not, trade futures but want more of an equity-based instrument, why a UNG is a possibility. It's probably the largest nat gas ETF. Trades a lot of volume. There is another ETF which I'll send some information on, but UNG is an incredible instrument to trade due to the volume. Notice how since the market has turned, this thing has just gone, in a nice stair-step fashion upwards. So overall on natural gas, why my feeling is that we've come down virtually 50%, slightly under that in the past year. If based on the dollar weakness that I foresee, I would anticipate nat gas getting back to $3, maybe above. But to the extent that this fiscal policy-oriented QE rises on the horizon, I should think that would easily propel it back to the $4 area, if not beyond. Now that's not a certainty yet, of course, but it's a factor, positive factor that's off there in the distance that could leverage things even more over and above just dollar weakness. And lastly, I see we have another chart set up on the UNG. This almost looks like a .com stock, if you will, dropping from 520 down to $10. I mean, it's kind of ridiculous. And that took a number of years to do, back from the 2006 top. But for those dreamers out there, it definitely might provide a little upside in the future. So there again, one last that is the purple volume lines, again, frame, whether it's yearly, weekly, and daily, is showing support for price. And that's a key metric for us, is understanding where volume is supporting price, or is it resisting price.
I have a first question that someone's asked us, and that is, what will be your entry into the UNG or the natural gas that you'll say, yes, this is where I want to, circle the wagons and play for a higher market? Do you have that price in yet, or are you already in the market or waiting for retracement? What's your game plan as we speak today?
Well, I trade ES futures just about every day. Nat gas, I trade it rather infrequently. So I have not tackled the nat gas futures in terms of entry prices. However, I'll answer that question with respect to UNG because I just had a conversation with my brother last night, and I told him frankly, I think you should buy some. And it's been such a steady performer in the past couple of weeks, and such good volume. The pattern to be it has a decline off the open every day, and the buy area would be in the morning. Let's say 7 to 9 a.m. Eastern time, if you will, possibly. I can't refine it any more than that, but the buy points on that seem to be in the morning, and then you can ride it to a positive close. It's been so consistent that what those traded dips as an entry point, and I would just keep scaling into it, all the while keeping a fairly tight stop. So that would be my strategy there.
Okay, that's pretty good. Now, Bill, how will the folks reach you to get the report and everything? I know that you're very generous about sending it out, so why don't you give them your contact information here, and if they're interested, they could give you a email and you could ship it out to them. So why don't you give us the contact information, and the folks at TFNN will put this into the Tiger Den for you. So fire away, please.
Sure. The most direct way to sign up for those materials, which they're all free, of course, is simply to go to wdkanalytics.com to the newsletter page, and there's just a big box where you can enter your email address, and and hit the button, and you'll be on the list. At any time you can unsubscribe or as you wish, but that gets the materials, and that gets free copies of the newsletter itself, which is all about market timing and about futures, and down the road we're going to cover ETFs a bit more as well.
Sure. What is your feeling on the stock market right now, Bill? Do you have an opinion right now?
Larry, I've been a bear a while, and it has paid off, certainly, and I do expect that this latest bounce that we've had is going to roll over. It doesn't show a lot of signs now, but the signs of the weakness are showing up in the extraordinary strength in the internals. I mean, they're just ridiculously overbought breadth in terms of momentum and other measures, and that's ostensibly in the newsletter. But I can't see that, it's going to. I don't even know what the market's doing this morning, but
no, it's quiet. The Dow's down about 50. The S&P's, down 7 or 8. So it's very quiet so far.
So I look for perhaps a test of the lows back in the low to mid 1800s on the ES. Now, one outlier, and I'll end with this. One outlier is simply the fact that I allude, and we'll have much more information about this I call it a white swan event that might be looming on the horizon if these central banks all get together and do fiscal QE rather than monetary QE. That would be a game changer. Outside of that, I just see continued weakness in the market.
Okay. Listen, thanks for being on the show, and we'll have you on again soon. Okay, Bill?
Thanks, Larry. Good talking again.
Good talking to you. That was Bill Koval of WDK Analytics. We'll be right back after these few words.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and what we're going to do here is to finish up the show to remind you that several big things happened just a little while ago. First of all, the crude oil made a double bottom on the 15-minute chart exactly at the 61% retracement at that 46.70 level. We've already rallied $1 a barrel from that level. Also, last night, silver was able to get down to the 61% retracement of the previous day's range, down at $15.60. We're now banging against $16 an ounce again. Gold has already exceeded the 78% retracement of yesterday's range. And if we get it doesn't take much, folks, much above 1170 in gold, we'll take it to 1190 very quickly. And above 1200, it's going to start looking interesting on a long-term basis. So keep that in mind. We're having a nice little rally here after the sell-off in stocks. We'll see if it has any legs. But if we do get really strong in the market today, we're going higher. That's the bottom line. We've had 3 days of massive divergence between the S&P, the Russell, and also the New York Stock Exchange Index, but that can change in a heartbeat. So pay attention and stay alert. That's about the best news that I can possibly give you. But watch the gold and the silver. We're still very, very bullish those. I don't think that this is far from over, and it could be just the beginning too. As far as the grains, I'll be seeing Rich Anderson tomorrow in Las Vegas. I'm hoping to have him on the show from there. He's there on a buying spree with his lovely wife. They have a little side business. It's really kind of a big baby business, and they have a big baby show there. So I'll be seeing Rich there. I'm going to be there for the money show and seeing Tom and Tommy O'Brien and some other friends that I haven't seen in quite a while. This will be my first speaking engagement for these folks in I think 7 years. And I had done them every year for 15 years, and then I quit. And this will be my last one for sure. Anyway, that's what we're watching today. Just keep an eye on these markets, where they're going to close today, and watch the breakouts because they're coming. It's just a matter of when. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.